as you're joining, add your name in the chat, where you're from. And we have one question for you to think about. What has been the most challenging during COVID in regard to changes in income and resources? And so please use the chat area and share that information. And we'll get started in just a couple of minutes. Let's see. All right. I think, Diane, I think we should have the live transcript now. Again, as you're joining, please share in the chat your name, where you're from, and what has been the most challenging during COVID regarding changes in income and resources. Okay, I see a few more people coming on. That's great. We'll get started in just a minute. We'll give everyone a chance to get in and answer our question to start us off this morning. Again, as you arrive, please share in the chat your name, where you're from, and what has been most challenging during COVID related to changes in income and resources for you.
Welcome.
Or maybe it's not.
Yeah, I was going to say,
maybe it's
Abby.
Yeah, and I was just going to add, maybe it's not challenges that you've had. Maybe it's people that you happen to be working with, that you've seen, people around you that you've seen, challenges that they may have had. Okay, we'll give it just another minute here.
Thank you to everyone that's sharing in the chat. That's great. Thank you.
All right. Well, Sarah, what do you think? Should we get started? All right, let's get going here. Welcome again, everyone, for joining us this morning. We are going to share a lot of information with you today And I'm so excited that we are able to do this. Sarah, do you want to move on to the next slide, and we will do our poll. We have a poll. We just kind of want to know today if you're joining us for personal reasons, for professional use, or a little bit of both. And so if you could please go ahead and answer that poll. I would kind of like to get a read of what people are thinking as they're joining us today. All right. I'm going to go ahead and end that poll and share the results with you then. Okay, and so today we have about 13% of you that are here for personal use, about 38% for professional use, and then 50% for a little bit of both personal and professional use. Thank you so much for sharing that information. Helps us to know what you were thinking about as you decided to join us this morning. And just to give you a little bit of an introduction here to what we are planning to do today, we are going to be talking about changing income and resources. We know that there have been a lot of programs available throughout COVID, and there have been some date extensions. Some programs have had deadlines that have passed. It's difficult to keep track of all of these things. And so we asked some partners to join us today and share their expertise with us and to keep us up to date on what these deadlines might be and what the process is for applying for these things and what we need to be aware of. And then we'll share also some strategies for managing all of this income and resources as we get to the end. So just to give you an idea of who's with us today, we'll do a quick overview of who's with us. Let's first of all start off. I'm Lori Hendrickson. I'm an extension educator with the University of Minnesota Extension. I work in family resiliency out of the Grand Rapids Regional Office. My colleague Sarah Kroymans is joining us today, working out of the Morris Regional Office. And we will share the last segment with you. As we move through, you kind of see an order here of how we will be going through the materials. Mike Fraw is with us. He's a managing attorney from Homeline in Minnesota and sharing information about the eviction moratorium. Aisha Servati is with us from Mid-Minnesota Legal Aid, and her colleague Ellen Smart, also from Mid-Minnesota Legal Aid, and they're going to share some great information about some of the assistance programs and unemployment and you'll see those come up. They will tell you a little bit more about what they're going to share as well. And Linda Reed is with us from Kutaska Community Action. She is a MNsure navigator and will share some information about health insurance and MNsure. And so that is our slate of partners today, and we're excited to get started. And and we cannot forget Diane Seefeld is with us. She is helping us to manage all of the webinar activities today. We are so lucky to have regional support staff that are able to help us with these activities. And so she's providing us with tech issues, monitoring the chat, and providing some links for you as we move through the materials. So thanks for that, Diane. We so appreciate it. So today, our objectives include identifying COVID assistance relief programs, those qualifications and some deadlines, taking a look at what we need to apply, discovering how to access those programs, the resources, again, the timelines, and being familiar with strategies that we can use to manage those changes that happen in income and expenses as we go through some of these changing resources that we have and the timelines and understanding how we can balance all of that out. The topics that we are going to focus on today, as I mentioned, the eviction moratorium, the economic impact payments, unemployment insurance and benefits, advanced child care, child tax credit, and insurance, health insurance, MNsure, and then again, strategies to manage the money and resources. So with that, I am going to pass this over to Mike Craw. Mike, if you can please give us a little bit of an introduction to what you do with Homeline, and go ahead and start.
Sure. Thanks, Lori. My name is Mike Craw. I'm an attorney. I work at a nonprofit called Homeline here in Minnesota. I run a tenant hotline where we advise about 15,000 renters per year who call us up with problems that they have about their landlord, want to know what their rights and responsibilities are. As one might imagine, the last 17 months have been unlike any 17 months prior to this. Homeline's been in business since 1992 in various forms and covering various areas. Currently, we cover the entire state. And what has happened in the last 17 months in my line of work is change, almost endless change, a very fluid situation. Our eviction statute here in Minnesota, largely not that different from what we had. This is not an exaggeration, prior to the Civil War. It's a really antiquated system that hasn't changed that much. And in the last 15, 16 months, we've seen 7 or 8 important changes that have happened in that arena, some at the federal level, some at the state level. But what I'm going to try to do right now is give you a snapshot of where we are today, quick overview of how we got there, and the next things that are going to be happening, changing, that we know are sort of forecast for this line of work. So if you could roll into the next slide, thanks. So as I mentioned, both at the federal and at the state level, there have been changes. At the federal level, I noticed that a lot of people are on the call from around the country. The CDC eviction moratorium has been in place since September of last year. Now it's gone. Supreme Court has decided that they didn't think it passed their tests. There was a prior federal rule under the CARES Act, which limited some evictions as well. At the state level, which is where we focus, almost all landlord-tenant law is generally state landlord-tenant law. And so we're focusing on the Minnesota rules. We've had at least 4 different versions of the eviction moratorium in place. And right now we're in what we have labeled the off-ramp or phase out of the eviction moratorium as of Sunday. So a couple days ago, we entered what we referred to as phase 4 of the eviction moratorium off-ramp phase out. So what's happening with this off-ramp phase out? Well, to really break it down, landlords are reaccumulating rights that they had prior to the pandemic and the peacetime emergency and all the declarations. Tenants didn't really forfeit much of anything as far as legal rights go during that time. Landlords had lost the right to evict in many cases, or to give a notice of non-renewal, or a notice to vacate, or a notice to quit. And they're, like I said, they're reaccumulating these rights sort of step by step. And what happened on September 12th, a couple of days ago, was a pretty important step or right that landlords reaccumulated, which is they have the right now to file an eviction for non-payment of rent if the tenant is ineligible for COVID-19 emergency rental assistance. Most tenants are applying through something called Rent Help Minnesota, and I've got the link on the next page, which I'll get to in a second. But this is a new right that landlords suddenly now have the right to file an eviction for a tenant that owes rent, is behind in rent, and is ineligible for COVID-19 assistance. The landlord has to give a 15-day notice to file a non-payment of rent eviction. That's a new rule. A lot of other states have similar rules to that, but Minnesota's never had a pre-filing notice requirement. Although it's starting to happen in some cities. Again, this is a very fluid area of the law, landlord-tenant law. It hasn't been for most of my career. I've been doing this since 1996, and generally laws just don't change much. But in the last certainly in the last 15, 16 months with COVID, but we've also seen the rise of cities starting to pass ordinances. So Minneapolis and St. Louis Park both have passed some ordinances requiring landlords to give something just like this, another type of notice. It's shorter notices in those cities, but those will last beyond COVID-19. This 15-day requirement is going to be over on October 12th. of this year. So that's a pretty short-lived window, and that's kind of what we've been going through since this off-ramp started at the end of June, and it's going to go all the way through into next year, which I'll talk about in a second. But where we are again now is we're already to phase what we call 4. Landlords have already reaccumulated the right to file an eviction for what's termed a material breach. A material breach is something in the lease that a tenant's not allowed to do. An example would be something like a dog or a cat, any kind of pet. If you're not supposed to have a pet without permission, I'm not talking about an emotional support animal, an ESA or a service animal. I'm talking about just I want to get a dog because I want to get a dog, right? A lot of leases say that you can't have a dog. And so if you brought the dog in, that would likely be a material breach in many cases. It's not every time, but it's very possible that it would be a material breach. Which brings me to, I guess, my first advertisement in a weird way. We're a free service, so it's not like I'm trying to drum up any business. And trust me, we've never been busier. June of this year was our busiest month ever. And then July was our busiest month ever. And then August was our busiest month ever. We keep having our busiest months ever. We're not really looking for work. But if you're a tenant or you know a tenant that's dealing with a problem with a landlord right now, it makes a lot of sense to have them touch base with us. And if we're not the right place, then we'll get them in touch with people like Legal Aid. I know there's a couple of folks from Legal Aid on the call today, or Volunteer Lawyers Network, if it fits their parameters. But we advise every single renter in Minnesota. We don't have any income requirements. It's simply, if you're a renter in Minnesota with a problem, give us a call or email us and we'll try to help you if we can. But it's really important for tenants to reach out right now during this shifting set of rules. It is slippery stuff. We have had, since the beginning of the pandemic, twice weekly meetings with our staff just to make sure that everybody knows what the same rules are. Right. And this is the only area of the law that we're really focused on is landlord tenant law. And we still have to stay informed because the shifts have happened so rapidly and so often that it's really difficult for tenants to keep up. Or landlords, frankly. We don't advise landlords. We only advise renters. Although we do also give webinars, which we've been doing since the beginning of the pandemic. I think we're close to 60 that we've done now. We're doing another one tomorrow. It's a free webinar where landlords, tenants, social workers, lawyers, lots of people attend, where we try to answer questions. I'm speaking for about 15 minutes today, but if this is a topic that you want to dive deeply into, like I said, every Wednesday for the foreseeable future at 1:30, we'll be doing a 90-minute session, and we generally get hundreds of people watching those. So they seem to still gather quite a bit of interest. One of the other things I'd point out about the calls that we've taken in the last 15 months, we, like all nonprofits, you have to sort of talk to people that might want to fund you about what we call deliverables, right? What outcomes are you having, or what statistics can you show that show you're helping people? And one of the things that we've kept for a long time is sort of our average call length. How long are people talking to on the phone with us? It's one of those things that you can measure. We do some other clerical things when somebody calls us, but on average, it took us about a half an hour per client pre-pandemic to help somebody, whether they were trying to get a security deposit back or dealing with a landlord not making repairs. Since the pandemic began, it's been more than double. Tenants are confused, they're frightened. And the confusion part and the frightening part, I absolutely get. The confusing part is very valid. The rules shift. People hear about some rule being changed. They saw it on the news or they saw it on Facebook and they think it applies to them. Maybe it does, maybe it doesn't. And so this is one of those areas where it's really tough to get up to speed on your own quickly. And so it really makes sense to try to reach out to some folks that are experts at this. Okay, as I mentioned, this notice requirement, this 15-day notice requirement, has a few key elements. The landlord's supposed to say how much rent is due as part of the notice that they have to give. Also supposed to tell the tenant that they have the right to evict for this, because tenants have thought for well over a year that maybe they couldn't be evicted. And so this notice requirement, as mentioned, will go away on October 12th. And the other thing that'll change on October 12th is that a landlord at that point can give a notice to vacate. This hasn't been something a landlord could do since March of last year. So an eviction is a court case a landlord files against a tenant. It costs about $300 for a landlord to file. A notice to vacate, a non-renewal, a notice to quit. This is a piece of paper that the landlord gives the tenant. There's no court involved, not at this point, saying, hey, you know what, you're a month-to-month tenant. And so every month our tenancy ends, our contract is over. I don't want to do another contract with you. So here's your notice for the end of next month, something like that. Or your 1-year lease is ending at the end of November. So here's your notice for the end of November. Throughout the pandemic, a landlord has not been able to do that for no reason officially, give a non-renewal or a notice to vacate. Starting October 12th, landlords will reaccumulate that right that they used to have pre-pandemic. And so that's going to be another ton of calls for us dealing with, but that's only because it's going to be a ton of issues for tenants all around Minnesota that are going to be dealing with that. Now, will landlords give a lot of notices? Yes, I think they will. However, landlords are still waiting, as are most of us, for the giant pot of money. Can you go ahead and scroll through the next slide? Thanks. So there are still, I think, $500 million laying around in an account somewhere where at the state level, this is federal money that's being funneled through the state and then being rerouted in a couple different other ways. But there's a lot of money out there that tenants may very well be eligible for. Tenants that may have never gotten financial assistance of any type in their life, at least they didn't think they did, might qualify for this money. So if you owe some rent, you should look into applying for this as a renter. If you're a landlord watching this and you've got a tenant that owes some rent, get them to this program. There's another one, depending on which county you're in, that might work for landlords to apply, but this is the key program, is Rent Help Minnesota. It's a pretty user-friendly application process. It takes time though. It takes quite a bit of time, which is why what you see on the screen, pardon me, the year 2022 is listed there. That's not a typo. If a tenant has a pending application with Rent Help, they can't be evicted for non-payment of rent through June 1 of 2022. That's a correct statement on the screen that you see, which seems like forever, but when this law was passed, Rent Help wasn't really even firmly on the training wheels at that point. And so the money wasn't really being distributed adequately. But we have this new rule that keeps tenants protected. If they have a pending application, all they have to do is apply, and then they get this umbrella protection. Now, if they become ineligible at some point, then the landlord could file an eviction. But this is why we haven't seen the eviction waves that have been talked about in Minnesota, at least. We haven't seen the eviction waves since the beginning of the pandemic. People like me, other tenant advocates have been saying, wait a second, if we take away the eviction protection, no eviction moratorium going forward, you're going to have a wave of evictions. You're going to have a year's worth of evictions or 2 years worth of evictions all at one time. But that was before, several $100 million flowed in. That changes things because the evictions that we're talking about, almost every eviction in Minnesota pre-pandemic has been for non-payment of rent. Well over 90% of evictions in Minnesota are for non-payment of rent. That's why landlords file evictions. And so landlords are hoping, so are tenants, that they're going to get this money from Rent Help that will help pay what tenants owe. And then landlords will be made whole as well. And so hopefully the June 1st of 2022 will give people enough time to get there. Last slide, please. Thanks. So you'll see some other languages represented on the screen. We have staff that speak Somali, Hmong, and Spanish fluently, along with, I don't even know what our staff is right now. We keep adding staff to help deal with the problems that people are dealing with. So 23, 25 people that are on our staff right now, and most of them are working on our tenant hotline. You can also email an attorney for free directly. This is a free service. There's a limit to what we do. We don't represent people fully like legal aid does many times, but we do try to help people figure out, hey, is this a problem you can solve on your own? If it's not, do you qualify for help from somebody else, and who might that place be that you should contact? And help try to chip away at the unknowns is really what we're trying to do for a lot of tenants that are out there trying to figure out, what are my rights, what are my responsibilities? And as mentioned, this is a free service. The primary driver of that is our tenant hotline, but the emailing an attorney is fine as well. And if you want to make a call in a different language, or somebody that needs that help, please pass that number on. Now, I noticed somebody saying that they'd like a link to the webinar for tomorrow. I'll put that in the chat once I'm done talking. I learned a long time ago in the middle of one of these never to try to link to stuff while speaking. So I'll take care of that as soon as I'm done. But I think that was my 15 minutes.
All right, thank you, Mike. Does anyone have any other questions? Mike will get us that link for the webinar for tomorrow. But any other questions that you might have for Mike, we'll just take a minute or so here to make sure we can get those addressed. He'll be back at the end as well to answer questions if things come up. I know I always need an extra minute to kind of process things and think about those questions I might have. So we'll make sure that we can get questions answered for you. All right. I'm not seeing any other questions here. Maybe you'll think about those as we move on. But next, we want to welcome in Aisha Savati, and she is going to talk with us about the economic impact payments. And Aisha, if you could just go ahead and do an introduction of what your position is, what you do, we'd appreciate that.
Of course, thank you so much. So my name is Aisha Savati. I'm an assistant supervising attorney and clinic director at Mid-Minnesota Legal Aid and the Low Income Taxpayer Clinic. And so Mid-Minnesota Legal Aid is a civil legal services nonprofit law firm serving primarily central Minnesota, and just really helping underserved communities and low income individuals really get the legal services that they need, the civil legal services that they need. And particularly for me and the Low Income Taxpayer Clinic, I help with tax controversies, and I'm a statewide program. And so that's something that I primarily note because a lot of people don't know that I do serve the entire state of Minnesota. And so we primarily are looking at individuals that have received some kind of notice from the IRS, and they're being audited by the IRS. So the IRS is threatening to collect against them and levy against them. And then we help them figure out what to do in response. And so what we're going to be starting with is the economic impact payments. And so the big question is, what are economic impact payments? So a lot of people, there's a lot of names for them. A lot of people refer to them as stimulus payments. That's probably what you refer to them as. They're formally known as economic impact payments. And then you'll also hear me use the words recovery rebate credit. And so what they are just in general are advance payments of 2020 and 2021 tax credits. And there's 3 rounds of payments that you should have hopefully received. And so the first round was through the CARES Act, and those were based on 2018 and 2019 returns. People received $1,200 individually, double that for married filing jointly, and then dependents were $500. And so the second round of them were the Consolidated Appropriations Act. Those were just based on 2019 returns. And that's an important point, is it was 2018 or 2019 for the first round and just 2019 for the second round. So some people received first round, but didn't receive the second round. And that was $600 per individual, double for married filing jointly, and then $600 per dependent. So it was $600 for both the individual and the dependent, same amount. And then for the third round, that was the American Rescue Plan Act. That was 2021. So both the first and second round were 2020. Technically, that Consolidation Appropriations Act was just at the very end, December 27th of 2020. And then the American Rescue Plan Act was in March of 2021, based on 2019 or a 2020 return. And that was $1,400 individual, double that for married filing jointly, and then the same amount, $1,400 per dependent. And so if you can move to the next slide. So we're looking at what is the eligibility for each one? And it did differ slightly depending on each round. And so for the first round, everyone on the return needed to have a valid social security number. And if there was one person that didn't, if the one of the taxpayers, so one of the individuals filing the tax return didn't have a valid social security number, if perhaps one of the dependents didn't have a valid social security number, then no one received any payments at all. And then there was different income phase outs, so different varying amounts. So they all started at $75,000 for the individual up to that amount, but then the phase outs were different amounts, and you'll see that slowly got smaller, smaller, and smaller, and smaller. And then it started out with, if you had no children, then this was the amount. And then, as I said, like show, it increases 10,000 per child. And then it was dependents over 16 were not eligible for a payment. And so for the second round, what it allowed is one of the taxpayer's spouses. So if there were two taxpayers and they're doing a married filing jointly return, then one of them could have what's called an individual taxpayer identification number, so an ITIN. So it could be a social security number person and an ITIN person. And then if their children had social security numbers, then all of them were able to qualify for a payment. The social security number people, the ITIN person did not receive a payment, but everyone else did. And then there is a different amount for the income phase out. And once again, dependents over 16 were not eligible for a payment. And then for the third round, there was no social security number requirement for the taxpayer. So the taxpayer or payers can have ITINs, and as long as the dependents have social security numbers, then the dependents got those amounts. There was no requirement that the taxpayers did. That was a huge thing for the immigrant community. And then the phase out was slightly less. And then the definition of dependent was expanded to include ages 17 to 24, as well as some adult dependents. So the next slide. So what didn't differ is you still had to be a U.S. citizen or resident alien. You couldn't have been claimed as a dependent by someone else. You needed a valid social security number. And then that definition of a qualifying dependent, and that is a very specific definition within the IRS of what a qualifying dependent or qualifying child is, how it's often referred to, is you have to meet that age or disability requirement if you're a disabled adult. You have to meet any income requirements specifically for the disabled adult of having less than $4,300, live with the taxpayer more than 6 months out of the year, 6 months and 1 day, have a valid social security number. And then the kind of the part is being born in the tax year. So if you had a child that was born in 2021, you wouldn't be getting the 2020 economic impact payments for them because they wouldn't have been on a 2019 or 2020 return. You would have to wait until you filed your return to get that. So the next page, slide. So how do I get my economic impact payments? So if you filed your 2019 return, if you filed your 2020 return, you don't need to do anything because they are based on your 2019 or your 2020 return. So you should have gotten your economic impact payments. And then if you receive certain federal benefits, so like Social Security benefits, retiree benefits, veteran affairs benefits, and you don't claim a dependent, then you should have gotten them automatically. And we'll talk about what happened if you didn't, because there were some people that didn't. And then if you use the non-filer tool in 2020, a non-filer tool is available to certain individuals, and we'll talk about the non-filer tool, then you didn't need to do anything as well. So the next slide. So then what happens if I didn't receive my economic impact payments? So economic impact payments 1 and 2 were known as the recovery rebate credit. So if you didn't receive either 1 or 2 at all, or you didn't receive the full amount. And so receiving the full amount means, like, for example, if you had a child that was born and you didn't receive the payment for them, if your dependent was improperly claimed by someone else, so then you didn't get the economic impact payment for them. So now you are gonna claim them on your tax return in order to get the amount for them. Then you need to reconcile that on your tax return. And so filing the tax return actually will also trigger the issuance of the third economic impact payment. So if you didn't get your 2021 third economic impact payment, filing the 2020 return will trigger that. And that's actually the only way to get that in advance payment is to file your 2020 tax return. And so the next slide. So you have 2 options. You can actually file a standard tax return and put the amount on line 30. And I kind of put an example there of what would happen depending on how, like if you received a certain amount, you're just putting the amount that you did not receive. You're not putting any amount that you did receive. So if you didn't receive a certain amount, that's what you put on there. The other option is the non-filer tool. So that's available for people who don't have a filing obligation. So if they make less than $12,400 or double that for married filing jointly, you cannot do it if you're married filing separately. So you must be single or married filing jointly. So it creates a simple tax return for those who don't have a filing obligation. It creates a $1 tax return. And so you don't want to use this if you have a filing obligation. And it's currently available again. It wasn't available after November of last year. So from November through early kind of this spring, kind of late spring, early summer, it's available as part of the Advanced Child Tax Credit Initiative, which I'll talk about later, but you're not required to have a dependent to use that. So next slide. So the non-filer tool, what you're going to do is you're going to create the account, you verify your identity, you provide your information, and then there's a box to input specifically that non-filer, that rebate, the recovery rebate amount that you are due. And so the maximum amount that you can put in is $1,800 for an individual, it'd be that $1,200 plus the $600, and then double that if you're doing married filing jointly, and then $1,100 for each dependent. So the $500 plus the $600. So you want to keep that in mind, the maximum amounts that you can put in. So you want to think about, what didn't I receive? The IRS actually sent you letters in January, if you received the letters, stating the amounts that you should have, that they issued, that they have on record that they issued for you. The issue often can become, well, what if I didn't receive them? But that kind of shows you. And IRS publication 5538 actually goes through using the non-filer tool. And it technically talks about a little bit the Advanced Child Tax Credit, but it technically walks you through the non-filer tool itself. So you can actually see screenshots of the tool. So the next slide. So the non-filer tool does require access to internet, an email address, a cell phone number, and a mailing address. So if you have any questions about it, if you actually need help, if you don't have access to internet, if you don't have an email address, if you don't have a mailing address, if you have any of those kind of barriers, we actually help people do the non-filer tool with them on their behalf. And so we really want people to contact us. We're the only ones actually offering the service for the non-filer tool for those who don't have dependents. And so we assist them with doing that. So contact legal aid, client intake at 612-334-5970. I put the hours on the slide that were available. And so contacting us and just saying that you need help with the non-filer tool, and they'll just check to make sure that you're eligible. And then we put you in touch with us, with our staff, and we have volunteer staff as well. So next slide. So the IRS Get My Payment tool is a portal that allows you to track the status of your stimulus payment. And so one thing to keep in mind is a lot of people are like, oh, well, I did it. It says it'll send you a message that it was received, and they'll send you a message whether it was accepted or rejected. So once they accept it, you're like, okay, now where's my money? And they Get My Payment tool allows you to kind of track the status. Now, payments are issued in batches, and it can take anywhere from a couple weeks, 10 days to 21 days, to up to several weeks, to some people several months. Your best bet is direct deposit. Paper checks can take even longer, but you have to be patient. The IRS is still processing millions and millions of tax returns from 2019 as well as 2020 tax returns, because a lot of people did paper returns. And so they're still processing millions and millions of returns. And so there's a huge backlog that they're doing. It is often common to also get error messages when using the Get My Payment tool. And so you don't want to check more than once per day, because it only gets updated once every 24 hours. And you have to type your postal address in exactly as it appeared on your return or non-filer tool form. And then we often recommend that you input it in all capitals, because often will help trigger it in the tool. And so one thing we also want to know is you can't change your address using the Get My Payment tool. You have to do that with the United States Postal Service. And there's actually a form with the IRS, the 8822 form. And then you can also update it on your next tax return if you file with the IRS. So next slide. So what if I receive too much or too little? So the IRS is not collecting overpaid economic impact payments unless the person was deceased prior to 2020. So if, for example, if someone improperly claimed a dependent and they received economic impact payments, or if a dependent kind of aged out before the end of the tax year, the IRS is not collecting those overpayments. And there are actually these plus-up payments. So people that should have received more based on their 2020 tax return that had already received their third economic impact payment may actually receive more money. And just a reminder that economic impact payments are not considered income for tax purposes for public benefits or determining eligibility for housing assistance. And so what if I owe the IRS or other creditors? That does differ depending on what round you were in. And so the first round of the economic impacts payments, the IRS was not offsetting the payments for IRS debts or other federal agency debts. It was for child support arrearages, and there was no guaranteed protection from creditors. So once that money hit your bank account, creditors could come after it. For the second round, again, it wasn't offsetting for payments due to the IRS or other federal agencies. It was not offsetting for child support, and it was protected against creditors. So that was really important to that second round of economic impact payments. But then for the third round, the American Rescue Plan Act, the IRS again, though, wasn't offsetting for debts paid to the IRS or federal agencies. It wasn't offset for child support arrearages, but there was no guaranteed protection from creditors. And then the recovery rebate credit. The tough part is that is technically a credit and a refund. So the IRS was originally actually offsetting it for IRS debts, then it chose not to. And then it was though having to offset it for other federal debts, then it is offsetting for child support arrearages, and there is no guarantee from creditors. And next slide. Here's some helpful resources available, and we always recommend people contact the United Way 211, and then those are some resources through the IRS and the Taxpayer Advocate Service, which works on behalf of the IRS and taxpayers to get them the assistance that they need.
All right, thank you, Aisha. I'm hoping everyone can hear me. My screen has gone completely blank from the webinar, and so if you have questions on economic impact payments, please add those in the chat. We'll try to get those answered. And again, we'll swing back and answer some questions at the end as well. Before we get into Ellen's presentation, I'm wondering, Sarah, can you make yourself the host, and I will get out and try to come back in?
Yes, I will do that. Hold on just a second.
All right. And then we will move on. If there are no questions in the chat, again, I'm not seeing anything right now. So Diane or Sarah, if you have you see any questions there?
No questions.
I don't see any
Okay.
questions. And Lori,
All right.
just able to be a co-host, so I'm assuming if you hop out, I'll be moved to a host.
It won't end everybody. That's why I didn't want to try it before. All right, I will try to do that and change my situation here. Let's move on to Ellen then. Ellen, sorry for the disruptions here,
No problem.
but if you want to talk with us a little bit about unemployment insurance and benefits, I'll hopefully try to get us back on track here.
Hi, my name is Ellen Smart. I use she, her pronouns. I'm an attorney at Mid-Minnesota Legal Aid, where Aisha is, and I've been there for 21 years, all in the benefits unit. And, since 2020, my life has become unemployment insurance. Next slide. Oh, perfect. So unemployment insurance changed as a program to respond to COVID in a couple of really cool ways. It allowed self-employed people like Uber drivers, independent consultants, personal trainers, 1099 earners to receive unemployment, and also allowed for $600 weekly payments on top of the weekly amount that people were getting, and then $300 per week thereafter. This started in March 2020. Next slide, please. So the bad news is this is all ended as of September 4th. So if you were receiving unemployment, you claimed your last payment that following week. So last week, you should have received it last week, and you are done, unfortunately. The extra payments are ending, all the extensions ended. Almost everybody was just cut off cold turkey. If you have not received or not requested your last payment, you should do that right away. The deed, the Department of Employment and Economic Development that oversees unemployment, by statute, they have to issue your payment if you request it within 2 weeks. It's discretionary up to 4. After 4, you probably can't request it. So if you haven't, do it now. Next slide. So the only exception, I do have some clients that didn't even apply or lost their jobs during the pandemic. So if you didn't apply until the end of February, you may still be in that first period of eligibility and your benefits aren't ending. If you aren't sure, there's a couple things you can do. Log into your account, look on your payment screen. There's like different codes for every type of unemployment. It'll, the extensions all have weird E or D codes starts with E or D. If it says STUI, which stands for Standard Unemployment Insurance, and you are still, that's still your payment, the reason for payment on your screen, then you're probably still in your first period of eligibility, which is generally 26 weeks. And you may not have been cut off cold turkey last week. Next slide, please. So what do you do if you're still unemployed? There's programs you can apply for. If you have minor children in your household, you could apply for the Minnesota Family Investment Program, which provides cash, medical assistance, SNAP, which is also called, food support, food stamps, and child care assistance for families with, of course, for families, minor children. We've also been told, at least in Hennepin County, that basic sliding fee childcare. So if you have too much money coming in to start receiving MFIP, but you need childcare to go back to work, this is a good time to apply, at least in Hennepin County. I don't know how other counties are looking. If you do not have minor children in the household, you can apply for general assistance, which is a whopping $203 a month, but it also has medical and food support. And then I know somebody else is going to talk about healthcare programs, so I won't talk about those. If you make too much money for MFIP or general assistance, but need food help, you could apply for SNAP. Let's see, there's also Social Security programs for people with disabilities. We represent people with those cases at legal aid, generally SSI, not RSDI, and it's probably a little too much in the weeds, but RSDI is the program for people who have worked and earned benefits kind of along the way. SSI is more for people who have been disabled and haven't been able to build up their work history. And because there are many private attorneys who will take RSDI cases, we generally focus our efforts on SSI. But if you call us, we can explain all that to you and see if there's an exception. And then shelter is available, I know, in some counties, not all counties if you need it. So to apply for most benefits, except for shelter and Social Security, these are the 3 websites you need to know. Mike's already talked about Rent Help Minnesota. Someone's going to talk about MNsure. Minnesota Benefits is the kind of one stop for everything. I will say, if you need housing help, go to Rent Help Minnesota. Do not go through Minnesota Benefits to apply for the housing assistance programs like emergency assistance and emergency general assistance. They do not carry the protections. Applying on minnesotabenefits.org does not carry the protection against UDs and evictions that Rent Help Minnesota does. So you want to start there. Did I want to say anything else there? Oh, Minnesota Benefits is a relatively new website. You can, unlike the old application program, you can access it on your phone. It's pretty quick. It's in different languages. It's a great website. And if there's any silver lining to COVID, it's that the state was able to pull together this website and it's working. You could submit documents on it. You don't send your documents like off to a black hole and they're never heard from again. So this is really, it's an easy thing to do. So if in doubt, apply. They'll tell you if you don't qualify. Next slide. Okay, so if you're already receiving benefits, many programs, especially MFIP and some of the healthcare programs, changes that you would normally have to report didn't need to be reported. And if you were in sanction, if you were in MFIP, if receiving MFIP and you had a sanction, meaning you weren't following program rules, you get 10% of your grant taken away the first month, then 30, then after 6 months, it's 100% cutoff. All the sanctions were suspended and they were wiped off. You have a clean slate. So when everything goes back to normal, you won't go back into sanctions. So you will get a new notice and a new chance to kind of get your MFIP grant back into compliance. So that's great. But the one thing they weren't doing, many programs weren't doing, were renewals and recertifications. And people weren't getting a lot of mail from the counties about those things. So if you did something like move during COVID and didn't notify the county because you didn't really have to during this because everything kind of went dormant, make sure the county knows your new address and really watch your mail for recertifications because they will start coming September 1, or they did start coming, sorry, September 1, and you don't want to be cut off. Next slide, please. So I've just listed some websites and some places to go for more help. I'm going to do a plug for the Senior Linkage Line and Disability Hub. If you have any questions related to those things or benefits or help available, those are great places to go. Also, Law Help Minnesota is Mid-Minnesota Legal Aid's kind of information center. And there's lots of great information about all areas of law, including areas of law that legal aid doesn't cover. We have great fact sheets that answer basic questions about many topics of law and knowing your rights and responsibilities. And I would really recommend going to those. And one thing I did not include was Career Force. Every county has a Career Force office and they have links to things like job fairs and things like that. It's awfully hard to get a hold of them right now because people are panicking, but they will do resume review. So if you're tenacious, you can get help through Career Force too. And they can help you look for new jobs. I think that was my last slide. So if there's any questions, let me know and I'll be here at the end also.
Thanks, Ellen. Those are great resources. And yeah, again, if there are any questions, please feel free to put those in the chat. We can wait just a moment and see if anything pops up. All right, not seeing any questions. Let's move on. Aisha's with us again to talk about advanced child tax credits.
Yes, me again, and more tax. I know, super exciting what everyone wants to spend their day talking about. So yes, the expanded child tax credit and the advanced child tax credit payments. So some key features of the expanded child tax credit. So these are just for 2021. I want to make that very clear. The legislation of the American Rescue Plan Act is just for 2021. These are key changes. Legislation hasn't been passed yet to expand it past this year. So it's just for this tax year. So the amount was increased to the child tax credit from $2,000 to $3,600 per child for children under age 6 and $3,000 per child for children 6 to 17. It is a fully refundable credit, meaning that you receive any credit amount remaining after is applied to any tax amount that you might owe. The maximum age increased from 16 to 17, And there is no minimum earned income requirement. So you don't have to have any income to receive the credit, which is a huge change, which means that for a lot of people that might just receive public benefits, they can actually, for the first time, file a tax return or a non-filer tool for a form and get this amount. And it's a huge amount of money that they're receiving for the first time. And it is ability, and the point is to really bring people out of poverty, and is actually already impacted 24% of children have been lifted out of poverty. So next slide. So then what are these advanced child tax credit? So the advanced child tax credit is an early payment of half of the child tax credit amount that you're eligible for based on what is anticipated to be your 2020 tax return. So payments will be made monthly. So they have been from July to December 2021. So then they receive the remaining amount by filing their 2021 taxes in 2022, which is a really key point. So people are receiving half of it now through December, but they need to file a 2021 tax return in order to receive the rest of it. So that's kind of a point that a lot of people don't think about, is they're just receiving money, but then we want to make sure that they receive the rest of their money, the other half of it. So then monthly payments will be up to $300 per month per child for children under age 6, and then up to $250 per month per child for children 6 to 17. And I say that up to amount because most people will be receiving that amount, the vast majority of people, but there are phase out amounts. And then the eligibility is actually based on your 2019 or 2020 tax return, whichever one was most recently processed. The key part of this, I'll be talking more about this, is you must be able to claim the same dependents on your 2021 tax return. So it's based on those previous tax returns, and you're getting this money for these dependents, but you need to be able to claim those same dependents on your 2021 tax return, or you run into issues. So then who is eligible? So again, you need to have one or more dependents who will not turn 18 before January 1st, 2022. Now, I have had a client, their child literally turns, 17 or turns 18 in December, the end of December 2021. And so, they're going to be 18 before then. They're not going to be able to qualify for those payments. And then you need to be able to claim them again on both a 2019, 2020 return and a 2021 return. And then there are those income phase outs. And so it's just going to be not exceeding those amounts, and then you're going to be receiving less and less payments. And again, there is no earned income requirement, which means you don't need income to qualify, which is, again, a huge part of this legislation. So next slide. So the key part of here is defining who's a dependent. So again, this is that qualifying child test, but specific here to the child tax credit is that age. The child must not turn 18. The child must have that relationship to you. And so kind of those definitions of relationship, and then residency again, but it's a little bit different. So the child must live in the same home as you for more than half of that year, the 6 months and 1 day. Or there's an IRS form called 8330 and 8332, which allows a parent to sign over to the other parent or caregiver or guardian their right to claim the child. So the custodial parent can sign away to the non-custodial parent or caregiver their right to claim the child for the child tax credit. So if you have that form on file with the IRS, then you can claim the child. So next slide. So your eligibility is additionally, that the child must not provide more than half of their own support or file a joint tax return. So this is little points that most of the time don't matter. Furthermore, they must be a U.S. citizen, national resident, and again, have a valid social security number. But you don't have to have a social security number. You can have an ITIN, and that's different than other credits that are available. So how do I get the advanced child tax credit? So if you had a filing obligation for 2019 or 2020, then you need to file. If you already filed your tax returns, you automatically should be getting those payments. If you haven't filed them yet, then you need to file them. MMLA does not file tax returns. You would need to find a tax preparer or a VITA site or TCE, and I have Prepare and Prosper's information at the end of this, and they can help you do that. If you do not have a tax filing obligation, and if you have completed the non-filer tool, then you should be receiving your advanced child tax credit payments. If not, you can complete the non-filer tool, which I'll talk a little bit about. And then if you need to update your information, you need to do the IRS Child Tax Credit Update Portal, which I'll talk about as well. So next slide. So the non-filer tool, I won't go too much into this because we've already talked about the non-filer tool. It's the same tool, but again, the main point I want to put here is that you can claim, you want to make sure that you put the dependents information, and then you can receive both your economic impact payments or recovery rebate credit and the advanced child tax credit at the same time if you didn't receive that for either child. And then the key thing is, do not complete this if you have a filing obligation or if you're eligible for other credits or filing benefits. Like if you're qualified for the earned income tax credit, do not do the non-filer tool, file a tax return. So if you have over $2,500 in earned income, do a normal tax return, get that earned income tax credit, do not do the non-filer tool. So a key thing is you cannot claim dependents who have already been claimed by someone else. Then if that is the case, you would paper file any return. And then once the ability in the IRS tax credit update portal is allowing you to add a dependent, you can do that and get your advance payments. And again, IRS publication 5538 walks you through the non-filer tool. And that one is very specific and very clearly walks you through the non-filer tool. And so I really recommend people look at that. So then how do I notify the IRS of any changes? And so that is the child update tax credit update portal. So currently you can verify that you're enrolled. You can unenroll to stop receiving payments. So we'll talk about why you do that. You can provide or update bank account information and change your address. But hey, what the main thing people want to do is change their dependents, add dependents because someone else is claiming their dependent. They might need to change their marital status and their income information because it's changed. They might need to re-enroll if they had unenrolled. Those are big things that people need to do, and it's still not available for them to do. The IRS said that that would be available by now, and it's not. And so we're still waiting for that to become available. So I really recommend people get the accounts set up so that they can do that. And so there's the website that people can go to for the child tax credit update portal. And then what you're going to do is you're creating accounts. You can log into your existing IRS account. Most people don't have that though, because you need to verify your identity. You need to have some kind of loan or credit card to be able to do that. Most of my clients who are low income cannot do that, even when they're trying to get a PIN mailed to them and they can't do that. And so I recommend people do an ID.me account. It requires some kind of personal identification card or a telephone number in the letter that you received. That's the IRS sends letter to those people saying who are eligible for the advanced child tax credit payments. Is a telephone number on that letter that you can call to verify your identity, and then you have an ID.me account. So next slide. So publication 5549 walks you through using the child tax credit update portal for everything that you can currently do through September right now. And so I really recommend looking at that publication and looking at what you can do in the portal right now, how to create the portal, how to use kind of the specifications, and then look for updates for it for when you can update your dependents. So next slide. And then here are some helpful resources. I really recommend that you look at the frequently asked questions for the advanced child tax credit because there's a lot of helpful information there. And look at Prepare and Prosper's website. They are going to offer limited assistance with the child tax credit non-filer tool. And I just want to say for Mid-Minnesota Legal Aid, we are answering questions about the child tax credit, and we are walking people through that non-filer tool for signing up in order to get their child tax credit, advanced child tax credit payments. So our intake is available for that. So again, it's 612-334-5970.
All right. Thank you, Aisha. Appreciate it. And there's so much information around the child tax credits that I hear misinformation around it. So I really appreciate that you shared all that. There's so much to know and such a quick timeline that things have shifted. And so, and knowing that this is only for this year at this point. So there's so much to learn about it. And so we appreciate that you took the time to explain things there to us. Up next,
have 2 slides left. Do you want to cover those super quickly, Aisha?
Yeah, I can. Sorry, they must have gotten out of order. So why should I unenroll? So that is an important point that people have. And so if you were not court ordered or otherwise designated to claim the child for 2021, you might want to unenroll, because if you receive the payments, unlike the EIPs, those economic impact payments that the IRS is like, hey, we're not going to try to collect those from you. They are going to start collecting if you make over $40,000 slowly. Like they're going to give you $2,000 and say, hey, if it's, like more than that per child, then we're not going to start collecting against you. But then, slowly, incrementally, as your income increases, $60,000 or more, then they are going to start collecting that money against you. And so you might end up owing the IRS. And then some people prefer to receive a lump sum credit to offset their tax liability, especially people who are self-employed or independent contractors, people that end up having that self-employment tax, or they do less withholdings throughout the year, so then they end up with a higher tax liability, or some people use it for a larger tax refund. And so I just want to also note that if you're married filing jointly, each spouse has to opt out. Otherwise, one spouse will still be there to receive it. And then how does the advanced child tax credit affect my tax return? It's an advanced credit. So again, it's not income. You don't need to receive the amount that you receive, and you want to claim the amount that you did not receive on your tax return. So you automatically want to claim half of the credit. And then if you didn't receive parts of it as advanced payments, you want to add that on there. So you want to make sure that you add the correct amount on the line for the for the child tax credit, because it's just going to be the line child tax credit. So you want to make sure you do the right amount. And again, it doesn't impact you. Those advanced child tax credits amounts don't impact your public benefits or housing assistance. And the IRS will not be offsetting those for state or federal debts owed that they are normally required to collect, is the language that they're using. But again, if it becomes a refund, they just might do it just like the recovery rebate credit.
Thank you so much. All right. Any questions then related to the child tax credit? Again, there's so much information out there and misinformation at times. And so I think it's important information to cover. All right. Let's move on then. Linda Reed is here with us from Kutaska Community Action to talk about health insurance and MNsure.
Great, thank you. I've been with Kutaska just about 19 years. I will be retiring next month, so I'll no longer be with Kutaska, but I've been with MNsure since the beginning. And yeah, so when we were first sent home to work from home, we're doing MNsures all online, and we had to do them in person. Well, when we weren't able to see clients, we were able to do them over the phone. So it made it a lot easier to reach our clients over the phone versus having them come in, because the application is actually all done online. So it's very easy for us to do. We're still doing this with some that come in that if they don't want to come in due to COVID reasons or whatever, they don't have to come in. We can still continue doing them over the phone. And then what happened is MNsure opened up open enrollment. Typically open enrollment is only November 1st through December 23rd, around there. And if you did not apply during that time, you were not allowed to, you couldn't do it any other time unless you had like a special enrollment with, maybe loss of a job, loss of insurance, you moved, or something that gave you a life-change event. So, so for instance, if you decide, nope, I can't do it, I can't afford to do the plan in December, I'm just going to go without. And then in July, you come in and say, well, I've had, a huge medical happen, I need insurance. They wouldn't give you insurance. You couldn't get insurance. But with the open enrollment, they opened February 16th and they stayed open until July 15th. So people were able to enroll at that time. to get their insurance. And then the tax credit, as you see on this slide, if you didn't qualify for Minnesota Care, you could only make 51,000 in order to get that tax credit, that applied tax credit. Well, now during this open enrollment, they opened that up. Everybody got a tax credit. There was no income guideline. Anybody that applied got a tax credit towards their plan to purchase what they call a qualified health plan through the MNsure database. And before I go further, I wanted to mention that MNsure itself is not insurance. People think MNsure, oh, I have MNsure insurance. No, you don't have MNsure insurance. You either have medical assistance, Minnesota Care, or a qualified health plan that you had to purchase through a broker. MNsure is just the state database that holds all the information, and when you're done doing the application, then it tells you what you qualify for. A lot of people get that, mixed up a little bit. But the one, like I said, but the one thing that was nice is that everybody got that tax credit during that time. Now it is closed again, but I just talked to a broker this morning, and according to him, they're going to continue this next year as well with that tax credit, and with the new open enrollment, everybody should still get that tax credit. And then Minnesota Care and medical assistance, you can go to the next slide if you want. Not that one. That was the wrong one. Is there another one? That one. Okay. Minnesota Care and MA are automatically renewing everyone. They're not closing anybody out, and they are going to continue that through the end of the year. So anybody that was on MA this summer or in the last year has automatically been renewed for the new year coming up. And then Minnesota Care as well. If you see on for the premiums, it's zero all the way down to 20,000 for one person, for instance, one person, where before COVID, it was a $4 premium way back up on the second row, 4,000. So they've dropped all those premiums all the way down to the 20,000 frame. So that has been huge for the Minnesota Care clients that have had to pay that extra premium, and it went from 0 to 80, and now it goes 0 to only $28 a month, the most you have to pay until you get over that Minnesota Care guideline. So that was one huge thing with that MNsure did with the medical assistance and the Minnesota Care. And they won't be, they haven't been allowed to shut anybody off through this time. And it sounds like that's going to continue through the end of the year. And after that, they weren't real sure. I talked to one of the county workers the other day, and she said they weren't real sure. They hear a lot of different things, but right now through the end of the year, they won't be closing anybody out. And then, so, with that being said, it's made our job a lot slower because people haven't had to renew. So we haven't been, all that busy with, getting people signed up, because they've just been, when they come in and say, oh, I've been shut off. No, you might want to call and make sure that you still have insurance just in case, and then go from there. But they said that they're still not allowed to close anybody off for that reason. Let's see. That's about all that I have for, there's some resources there available. And then the MNsure.org would be your main resource to get into the application. If you go into the MNsure.org website, it'll pull up your application where it says create an account on the top there, where you go in and you can create an account, do your online application. The one thing with unemployment for an income for the MNsure this year, we had to claim what they received on unemployment as a monthly income, but not the subsidy that they received. But when it came to the yearly income, we had to change it and add the subsidy to it. But their MA was based on what they made for actual monthly income. So some it mattered and some it didn't with the extra subsidy. So like I said, MNsure.org is the main one that you would go into to do the application. Anybody have any questions? That's it. I know I was short, but that's what I got.
Okay, we have just one question. Each county still has a navigator, is that correct? Or at least one navigator?
Yes, Kutaska here has 4. We have 4 navigators. There's actually 211 in Grand Rapids here is having every one of their volunteers be navigators. So right now they have 6 navigators on staff. That's the most we've had in Itasca County. It's been just us 4 for several years, but now they've added more staff, and then Grand Itasca has a couple, and the Project Carefree Clinic has 1. So yeah, there's more navigators now than there were before.
So we may find in various counties?
Yeah.
Sorry.
Yeah.
Okay, so there may be more than one in various counties, depending on the programs that are offered.
Yeah.
Excellent. Thanks so much, Linda. Appreciate it. And then we'll move on. This last section, Sarah and I would like to talk about strategies related to the income and expenses. And all the changes that we've talked about. We see that there are a lot of situations where there can be changes that occur, whether it be in income, your expenses related to some of the programs we've been discussing. And so we wanted to take a little bit of time and think about the strategies related to how we handle these. In the next, on this slide, you see here, one important point we wanted to bring out is the importance of involving family members in conversations related to spending decisions. You know, it helps that we have conversations with family members around the spending priorities that we have. This does not mean that we are burdening children and other members of our family with worries about money, not having money, things like that. But it's important that everyone in the family understand that we make choices with where we spend our money. We prioritize what we do with our money. And so important that everyone has a voice in sharing decision-making. And that's how children, in fact, learn about what we do in money management as well. Next slide. Thanks, Sarah. What we wanted to talk about is the changes, the strategies related to these changes. We've talked about a variety of programs that might provide additional resources for our families. It may also be that there are expenses that have changed as a result of some of these programs we've discussed today. And so as we take a look at these changes, we want to take a look at the strategies that help to make our spending and saving plans work. And those include things like eliminating or reducing spending on those non-essential items, reducing spending for basic needs if we can do that, possibly revising our budget, our spending and saving plan, increasing income, And we always include it, but I always say that it's a last resort also in using credit to handle these changes as well. So when we talk about having a spending plan, that can help us to prioritize what we spend and help us to adjust from month to month how we're spending as we need to. And so the benefits of a spending plan include helping family to make decisions about how we're spending our money, also looking at providing for needs before wants, and matching our spending to our current income. And then we mentioned the communication, the family communication piece, and it prevents family arguments because we've talked about where we want to prioritize our spending. In this case, we're looking at the 3 steps to a spending plan, and we'll take a look at each one of those. First, identifying our income and making a spending plan. We're looking at identifying what are those sources of income, and are there increases or decreases in the various sources of income, take-home income that we're looking at. So if unemployment decreases, we have to think about what kinds of, how do we go ahead and change that or supplement the income if we still are unemployed? What do we do? How would we replace that income that we were receiving? So that's just one example of the things that we heard today. So think about, how that income source affects how we then spend throughout the month. And once we know what our take-home income is that is available, we just determine those expenses. And we, again, think about those essential expenses, those with the highest priority. And if our income is reduced, we may need to look at those expenses that we can reduce or eliminate. If there's additional monthly income, perhaps we've put off some purchases in the past, and maybe there are opportunities to go ahead and take care of those or set aside money for future obligations that we may have. And then the last part of this, of course, is the balancing out to the bottom line. It's all about balancing the income and expenses and making our plan work from month to month. And we know that we can adjust as we need to by increasing our income, decreasing our expenses, or maybe doing a little bit of both in order to make those things balance out. And I'll let Sarah continue on then.
Thank you, Lori. So as Lori was alluding to on step 3, looking at that bottom line, it's important to really assess and think about your situation, size that up. How long do you think your present financial situation will last? And that can be a moving target for sure. As we heard about all of the benefits that have come and gone during COVID, we're never quite sure what's around the corner, but to have your best estimate on how long will this current situation last. Again, looking at income, how much can you really count on? How much money is really needed to cover essential monthly costs? And that'll give you a target of how much money is needed from benefits or income to make ends meet. Also, being very aware of how many creditors are owed, what's that total amount, and be very honest with yourself and committing that to paper and having a list. Who do you owe money to? What's the balance? What's the monthly payment? For some people, they may need to pull a credit report to gather some of that information, or maybe they need to go to a pile of mail that they've been avoiding for a while to gather that information. Think about what assets could be used to pay off debt. Do I have items that perhaps I could sell? Maybe it's a simple garage sale, but maybe I have a boat or a camera or something that I might be willing to sell to help pay off debts. Also, it's important to think about what debts are most important to repay first. And a lot of things factor into that. People have different ideas on that based on their situation. They may want to pay off high interest rates first. They may want to make sure they're making their car payment because their car gets them to work. So a variety of things go into that. And then also it's important to think about what debts could be satisfied by surrendering or giving back items. If you're not able to make payments on items, is it appropriate to turn those back so that you no longer have that debt? And so we encourage families to think about what will affect their family's health and security the most. For some people, that might be the housing and utilities and healthcare, right? Transportation to get to work or to the doctor. And it's going to be different for every family, but to really prioritize and think about those things. Also consider what will happen if you don't pay bills. When we look at secured loans, if I don't make my mortgage payment, that would go back. If I didn't make my vehicle payments, that would need to go back. So know what kind of agreements you have entered with various debts and those consequences. And so again, make that listing of debts that you have so folks have that information as they're making decisions. Also, if you have balances on credit card, make minimum payments as you are able to keep those accounts current. Compare interest rates, see if you can do something there so the debt isn't costing you as much. If possible, stop using those cards, maybe cut them up or close the accounts as well. There is a great resource called PowerPay. It comes out of the University of Utah Extension, and it's a nice little calculator. Go to that website, powerpay.org, and you can enter your data, your balances, the interest rates, minimum payments, all of that. And then it'll give you some scenarios if you were to pay the highest interest rate or PowerPay on that, right? Make the minimum on everything, but PowerPay on that highest interest. What would that look like? Or maybe you want to attack that lowest balance debt first so that you can get that one off the table. Or maybe you look at the one with the shortest term and you want to PowerPay. And so definitely check out that calculator to see how if you have extra cash to make more than a minimum payment, it'll show you what might be best based on your preferences. Also, I referenced credit reports earlier. Late payments and non-payment of bills are recorded on credit reports, and that can damage our ability to get future debt or future credit, for example. So if I want to get a car loan in the future, I want to purchase a home in the future. So definitely check that out. There have been some adaptations made during COVID where people are able to get copies of their credit reports more frequently. Go to annualcreditreport.com to get free copies of your credit report from each of the 3 main credit bureaus, Experian, Equifax, and TransUnion. You get the report, not the score, but I really think the information that's in the report is so important that will help folks develop the full picture of their financial situation. We also have a wonderful publication and extension with some great resources, Adjusting to Income Loss. It looks at strategies on setting spending priorities when income falls, information on helping you decide which bills to pay first, additional information on making the most of what you have, strategies for spending less, some information also on talking with creditors. That communication piece is so important. And then bartering. So also looking at some alternatives there. So I'm going to pause a moment if that was really quick, but if folks have questions, go ahead and put those in the chat. And I'm going to run through the last couple slides as we monitor the chat box for questions. If people need a certificate of participation for this webinar, we do have those. We do ask that you complete our evaluation, and one of the questions within that evaluation we'll ask if you want that certificate, and then you will indicate yes or no, and you'll give us an email, and that will be sent to you. We do ask everybody to complete the evaluation using this link, and thank you, Diane, for putting that in the chat box. because that helps us improve our programming. And one of the questions in the evaluation is asking for suggestions on future webinar topics. So you can inform our future programming. Also, there will be a follow-up email 1 month at the end of after this series, asking you and it'll have another evaluation link in that, but asking for feedback on how did you use the information? Was it useful? Because that'll give you a little bit of time to apply, to use what you heard. In that follow-up email, we will provide a link to the webinar recording. So you'll get that down the road just a little bit. We have got some super great webinars coming up. We have some talks in Spanish. And the first one there is September 2nd. That one's already happened, but you can see the topics there. On the bottom left-hand corner, In This Together, Supporting the Needs of Families and Communities. So that's where this one on changes in income and resources fell. Strengthening resilience, some tech use, some great pieces. I just looked at the registration for the December 15th of Promoting Youth Mental Health, and we're getting lots of registrations for that. Then you'll also see on the bottom right, Making Sense of It All. We cross-promoted this webinar in that series as well, but you can see the topics there. Also, we have some health and nutrition educators that are doing a series on what's for dinner. So some fun topics that are very popular. We are also working on identity theft and scams. So a variety of topics there. I encourage folks to participate. Just a tickler, the first one, the child identity theft. We have an assistant or associate professor from South Dakota State University who is a child identity theft victim herself, and she went on to do her PhD on identity theft. So excellent speaker, come check those out. And then the last one, our Minnesota Communities and You. We're looking at rural stress and ambiguous loss, military families, African culinary heritage, transgender youth legislation, halal meat production, using American Indian legends to teach financial education, and our stories activities to engage and empower youth in tribal communities. So we've got quite a variety of topics there. You can also just go to our extension website, www.extension.umn. Diane will put that in the chat for us. And you can go to our courses and events page and find these classes as well as any of the others. We encourage folks to become social with us. Check us out on Facebook and Instagram, Pinterest, Twitter, connect with us. And then down at the bottom of this slide, we have our family news e-newsletter. So if you would like to resubscribe to that, definitely check that out. Thanks, Diane, for all of those great links there. Perfect. And she put the courses and event link there. Did we have any questions come into the chat, Diane or Lori?
Do not see any at this time. If anyone has any questions, please, this is the time to do it. We are at 11:30, so I understand that people have other commitments and may be leaving us, but certainly feel free to ask those questions if you have them.
Thank you to our presenters, our facilitators. Excellent job, Linda and Aisha, Ellen, Mike, thank you. I think I hit everyone, Lori. We so appreciate you being with us today. So we'll hang out for just a couple more minutes if folks have any questions, but have a great day.
Yes, thanks, everyone.
Diane, I think we can go ahead and stop the recording.